Hi all. In today's video, we deep dive into the trading strategy of Marios Stamatoudis, the swing trader who grabbed 4th spot in the 2023 US Investing Championship with a huge 291% return in less than a year. Unable to picture himself analysing food while studying food science and human nutrition at the Agricultural University in Athens, Marios started to find ways to make money online. A simple Google search ranked stock trading and investing as the 3rd best option to make money online. It sounded interesting to Marius, and that's how he picked up trading. With some elementary knowledge, he started day trading and, thanks to excessive leverage, blew his account in just 3 days. That obliterating experience shook him to the core. With a hurt ego, he took up some courses and alert services and started trading again just to last 7 days, a little better than last time. It was then that he started studying and discovering trading to figure things out on his own. The little progress each day drove him to own the process he was building, and it didn't take much longer for Marius to become profitable as he plugged most of the gaps in his trading strategy and discipline. Marius posted his first break-even year in 2017, recovered all his past losses and expenses in 2018, and achieved high triple-digit returns in 2019. A major turning point came in 2020, when Marius was still day trading and closing out positions on the same day. He was mad when he saw so many stocks continuing to go up, and had he just held the stocks for a couple of weeks, he would have made more money than battling around with new trades every day. Determined to take action, he immersed himself in books by some of the greatest swing traders such as William O'Neill and Mark Minervini. While still deep in his reading and learning from the experts, he transitioned to swing trading, incorporating many elements from his day trading framework. It proved successful for him. He also discovered the Twitch stream of Kristjan Kullamägi and was amazed to see the similarity in their trading approaches. Ultimately, he left day trading and fully embraced swing trading. Once he was back from his mandatory military service, Marius started swing trading again in 2022. He joined the US Investing Championship in late January 2023 and still managed to rank 4th. Marius follows 3 key swing trading setups: classic breakouts, episodic pivots, and parabolic shorts. There is a huge similarity between these setups and those followed by Kristjan Kullamägi. Both of them pivoted from day trading to swing trading, and they ended up taking setups from their previous styles. As a daily routine, Marius skims through well-laid out scanners for these setups, wherein he has the best performer screen on 1 month, 3 month, and 6 month timeframes. He screens through individual names on the list, looking for the desired setup. He specifically looks for price tightening on the right side after a big move, and when he sees a stock that shows promise, it goes onto the watch list. He then identifies the setups that are ripe for breakout, puts a trend line on the breakout zone, and creates an alert. He also has a dense volume scanner that identifies stocks with a massive change in volume. Typically, it compares the average last 40 days to the 52-week volume and throws out the stocks in the top decile of the list. This scanner comes in handy for episodic pivots. He also has an IPO screen where he looks for stocks that can be shorted after parabolic moves. An important criterion in all of these scanners is average daily range and average true range. Both are measures of average movements in the stock price, with the main difference being that ADR does not consider gap ups and gap downs for calculating the range, whilst ATR does. Marius looks for high ADR, typically 5% plus, to filter stocks that move faster during the day. Marius also does a detailed weekly scan to identify the themes that are doing well at any point and determine the basic market structure that is extremely helpful while running daily scans. It makes sense too, because if you have a better bird's eye view, you can be much better prepared to trade every day and act fast. For example, he played the AI and crypto themes very well, which gave him several high flyers while he competed. Let's now look at the setups. In the classic breakout setup, Marius looks for a big move in the past 1 to 6 months. While Marius doesn't mention a specific quantum of increase, Kullamägi trades the same setup with a 30 to 100% price increase. The price jump is followed by an orderly consolidation, in which price makes higher lows, surfing the 10, 20 or 50-day moving average. The consolidation lasts from 2 weeks to 2 months, and is followed by a range expansion, or breakout. Like Kullamägi, Marius also puts in alerts when the price hits the trend line drawn on consolidations. The entry happens when the price crosses the trend line with the stop loss placed at the low of the breakout day. For example, he traded GREE when it was forming a down channel after a 140% move from the low in a short time. The stock broke out from down channel on this day at $2.80 and went up 200% in 2 weeks. The stop loss was placed at $2.40, which was the low of the breakout day candle. With a risk of 11%, this was an up to 20x reward trade. Marius didn't take the trade that far because of his standard exit rules. He takes partial profits as the stock reaches 2.5 to 3 times the ADR, and trails the rest of the position using the 10-day moving average for fast-moving trades and the 20-day moving average for slower-moving stocks. Apart from that, to minimize the risk after the trade has delivered a certain multiple of risk, Marius moves his stop loss to break even, locking in the downside from the trade. Let's look at the next setup now, the episodic pivot. In an episodic pivot, a sleepy stock gaps up, led by a catalyst like an earnings surprise, a drug approval, or a regulatory change. Marius quantifies the gaps as 5% or above, but acknowledges that bigger gaps provide better opportunities. A common theme in this setup is a beaten down name that has not done much in terms of price action in a long time, which then springs to life led by a catalyst. The entry in this setup varies from case to case for Marius, but Kullamägi gives an objective entry point for episodic pivots, which is the opening range high. This can be the high of the first 1, 5 or 60-minute candle. The stop is at the low of the day. Many of the big winners in Marios' trading account came from exactly this setup. For example, he traded GigaCloud Technology, or GCT, in December 2023 when it gapped up 13% from the previous day's close on an earnings surprise. The stock delivered a 70 to 80% return in just 1 month. Here also, the risk reward was quite favourable at 1 to 8. The third setup Marius outlined is the Parabolic short. In this setup, he looks for stocks with big moves in a short time. Such moves can range from 100 to 400%, and with moves that strong, shorting such stocks can be risky. This is where stop losses and risk management become crucial. The setup mainly emphasizes the mean reversion. Like Kullamägi puts it, think of stocks as rubber bands. If they get really stretched short term, they can have powerful snapbacks. The idea is to short them at the first sight of stress. This could typically be done on an intraday chart when you see the stock not being able to maintain momentum. The simplest way to enter is when the stock breaks the opening range low. This could be the low of the first 1, 5 or 60-minute candle. If the stock opens up, the first sign of a crack can be a red candle on a 1, 5 or 60-minute time frame. To be doubly sure, one can wait for the stock to have the first crack, bounce back into VWAP, and if it fails at VWAP, then enter. The stop loss has to be the high of the day or the high of the entry candle if the daily high is too far. Now let's look at some statistics that Marius posted in the championship. His win rate was 32% overall, and it ranged from 25% in bad markets to 40% in good markets. He took 2 trades a day, or 400 plus trades in the year. His average gain to loss ratio was 5-1, meaning his average gain was 5 times his average loss. The system has massive positive expectancy despite a low win rate, because Marius would have gotten a few huge winners that would have dwarfed many tiny losses. The 291% annual results are commendable, given that Marius joined in late and reportedly did not use any leverage for trading. What stands out in his system is that it builds in a lot of failure, as Marius risks 0.25 to 0.4% of his trading account in one trade. This way, even when he has 10 losing trades in a row, he would be down a maximum of 4%, a drawdown that isn't too hard to come back from. He did make some mistakes while in the competition, but these were just tiny blips on a monster performance chart. The process I follow is rather similar, albeit on a far higher time frame. I use weekly charts, which means the process is far more passive, with my analysis completed on the weekends. Just like Kullamägi and Marius, I look for breakouts showing strong momentum. Our scanner was designed specifically for this purpose. We filter the quality metrics of a stock and apportion a value to it. We do the same for the various metrics of momentum, and then look at the breakout characteristics within a technical score. Merging these scores into a total score allows me to hone in on the very best selections for further analysis. Anyone interested in the scanner or even in following my trades can join us using the links below. In the end, for all traders, it boils down to the basics: picking up a style that promotes positive expectancy and following it with discipline. This is what enabled Marius to produce a solid annual return, and its teachings can help guide you too. Marius leaned on Kullamägi's approach, a breakdown of which can be seen here. As always, thanks for watching.